All right, how's everybody doing out there? Well, welcome everybody who's live with us currently. A few more joining, I'm sure, shortly. A little mic check here, make sure we're sound good. So I'm currently live with Michael at Fair Free Digital. Before we get rolling, as usual, if you're here with us today, please consider we're not licensed financial advisors. At least I don't think Michael is. I'm certainly not. And if you were to take advice blindly based on anything that you hear us talk about today, you're going to end up losing all your money and living in a van down by the river. Now, with that said, I've got Michael here. I'm going to let Michael say hi and introduce himself, then we'll get rolling. So, hey, Michael, how's it going?
Hey, thanks for having me. Can you hear me?
I can hear you. Crowd,
Excellent.
can you guys hear him? Good. Yep. So today, yeah, Michael, he's got some updates for us. A few updates, namely current price action and some adjustments for the Fed activity and you know, an update on his paper. Now, if you guys recall, last time we talked about his block-based cycle time analysis. And so he's updated that recently with a little bit updated version of that with a PiBlockTop. And so we'll give him a chance to talk about those updates as well as some other updates here. But what I'm going to do is I'm going to just share my initial thoughts before the market goes live, because I was going to do that today before we go live. So I'm going to share my screen here. I'm going to give my thoughts about what's going on with this current price action ahead of markets opening tonight. And then I'm going to turn over to Michael for his bit of presentation here, and we'll take a look at comments as we go. And thanks for joining everybody too. So long story short, obviously we fell through. Nobody expected us to fall through this hard, except I did highlight, I believe, on the last live stream that I did, that if we did fall below 51.8, now I did say it was about a 70% chance 51.8 would hold, in my opinion. It did not hold, obviously, clearly. We're now below the 120, and we're in potential bear market territory. Now, if there ever was a setup for a V-shaped recovery, I think it's now, and I think Michael will probably talk about that, or he'll agree. Given the fear indicator, generally speaking, this is a good potential time for the market to bounce back. Fundamentals remain fairly strong. There are a few small red flags, but they've not grown into anything significant just yet. We had one smallish Litecoin pump before we rolled over, those type of things, but it wasn't huge. Ethereum is also strong-ish, but it's not parabolic strong, right? So there's a lot of, to me, there's a lot of indicators that we could actually make a faster recovery than, say, over here. And to the left, obviously, from May through July, that was a pretty rough summer. And this is the worst case scenario, I think, right now. See, with the wick we just had, this wick low right here, just above that 41 support. You see how we wick just above what I have here indicated as a 29K support. It's my opinion, and this is my Coinbase feed. They've adjusted this. At first, they had their wick. You see this fib level I've got drawn on here, starting at 42. They had a wick down all the way to 42,000. I don't know if it's just a different time frame, but I've noticed that it looks like this has reprinted a wick up at 45K. But just most exchanges did print a 42K low on that kind of liquidation cascade we had a little bit there, which is right above the key level that I was watching, which is basically this high from over here in January through this price action right around 41,000. So we got just above that. The worst case scenario is that this exact type of pattern plays out, where the low that we just had put in, we end up being range bound a little bit above it, come back close to it, kind of have a capitulation event here, a little bit further out, maybe late this month, early next month, and then an even worse spring low a couple months out, right? That's the worst case scenario. The best case scenario is this kind of September sell-off activity, where if you look at the September activity, you had a sell-off, a bounce, and then a pretty severe sell-off, kind of a weak bounce, and then it bounced. So there's a chance that we've got this type of price action going on, and we could have a pretty strong recovery out of here. Now the fundamentals are far more in line with the fundamentals. They're much more like the fundamentals we had here, and much less like the fundamentals we had here. And there's a couple reasons for that. Alt season was super strong through here, right? We haven't seen that type of reaction. We saw the on-chain fundamentals change pretty drastically through this period over here as well. And then currently, the on-chain hasn't changed much here, right? So here's the big red flags we had last time. I'll draw as a yellow flag. Where alt season, we saw just alts going absolutely parabolic. and we had a big shift in on-chain. We were also way overheated even through here with leverage and market sentiment. Through here, we didn't have a super strong alt season. It's been a pretty weak one. On-chain remains fairly strong. And then market sentiment is completely soured all through this move right here. And it's soured largely on expectations of, 500,000 by the end of the year, people putting that out there, right? But nonetheless, it is my opinion that we are still in a situation that feels more to me like late September than May. Now, of course, we want to be cautious. Again, so my worst case scenario is we stay range bound basically in the 41 to 51 range, and then we'll have to just see what happens from there. So those are my market open thoughts. I will tell you guys, I'm still looking closely at Litecoin as a last hoorah play. On a lower time frame, it feels to me like we're putting in a floor. We have weekly support here right at $150. It feels like we're putting in a floor here. I've taken a very small 0.1% risk initial stab at this, at kind of catching the knife at the bottom here. And as the technicals improve, I'll be adding to that position. I probably won't be I won't be up to a 1% risk until we get outside this trend line over here, though. Okay, so that's just fine.
And we really don't want to see Litecoin do that well.
No,
for
you don't.
For like a healthy market, you want to see Litecoin really pop at the end.
Yeah, exactly. This is my hedge. So when y'all see me playing Litecoin like this, the reason is if Bitcoin makes a strong recovery, then I'll simply lag and I won't have as a good trade if I had leveraged Bitcoin, which I will flip when the technicals flip strong for Bitcoin. When Bitcoin makes a solid recovery out of here, takes back some of these key levels, I will just simply dump all that, whatever I had of Litecoin, and go right back into Bitcoin. But for me, Litecoin is a bit of a hedge. And it's also, if you look at the Litecoin Bitcoin chart, I continue to see it's coming into this bottom. This is the 2017 all-time low weekly close. We built support kind of through here, and we're coming back into that area to test it right now. So for me, it's still a decent hedge play on if this market decides to roll over. But that's where I'm at, and I'm gonna shut up now and let Michael talk. We have a guest on here for a reason, but I did want to just give you my opening thoughts as to what's going on with the market. I am not feeling any sense of panic myself or too terribly much concern. Again, my worst case is that we're not far from the floor. I would say if I were to summarize my entire feeling about this whole market right now, is we're much closer to a floor than we are to a ceiling. And that's basically summarizes my entire, we can go range bound for a while, so I'm not going to get crazy on trades because we're just in a kind of a weak area right now. But it's my feeling that we're much closer to a floor than we are to any sort of ceiling. So I'm going to stop there. And Michael,
do you mind actually sharing your screen again, just so that
right,
and like zoom out on the chart, just for like kind of the consolidation that we've had from our initial Pi cycle top to now, right? So like we've spent a lot of time in this green zone, and we've spent a lot of time in this. Oh, no, I don't need the Pi cycle top. I just wanted to show. Yeah, it was like right about, it was at that top. It actually nailed the top.
Yeah.
And depending on what you're measuring against, right, in USD it popped, but as compared to other assets, it did not, which is kind of one more. Yep. Yeah, so we'll look at that a little bit when we get to the charts. But we've kind of spent a bunch of time in this like 55 to 65 range. We spent a bunch of time in this 41 to 28 range, and even quite a bit of time now at that 41 to 47 range, but we really haven't spent a lot of time at that. If you pull the bottom of that box up, actually, pull it up more. Sorry, yeah, pull it up. Yep. Yeah, we haven't spent a ton of time in this range, right? So like, if we need a little bit of time to just kind of consolidate price in there and head higher, I was just looking at what you were looking at and talking about being range bound a little lower. I wouldn't be shocked if we're range bound in this area for just a little bit before kind of moving on, just looking at it. But yeah, anyways, because there's not a lot of price action in that, right? In that space, there's a lot of jumping up and down. So the market likes to come back and test those areas. And I mean, yeah, I still personally am not moving away from like a 4-year cycle with the nuances that I have around it with lengthening bull market and shortening bear market. So if we're in this area for a little while, week, 2 weeks, and then we start to basically do the other half of the move of what we did from the halving up until the mid-cycle top, that wouldn't be super surprising.
So I want to show one more thing on here. My 120-day SMA, I kind of want to highlight this. The prior high, so if you look at just the general market sentiment, and this is why I was much more apt to get out, largely on spot, on my tradable spot during the summer. If you look at the all-time high the 120-day SMA had put in over here, it was only ever up to $11,000, right? And then that's pretty much where we launched, right? That's the peak of the 120-day SMA. That ended up being, that same area ended up being resistance in 2017, ended up being resistance that little bit in early 2020, and then that's what we launched right through, right? And that swing high level, but if you look, so that was the when you lose a long moving average like that, the downside is coming back to the prior all-time high of that, or the launch point of that moving average. So our downside was more technically. Now we all knew fundamentally it was probably closer to where we stopped, right? I was saying 26 was like probably the worst case, or 24, right? Yeah, this little block right here, one of these two areas, but nonetheless, that was more or less technical. Now, if you look at this though, the all-time high that we put in of the 120 was over here. We're just below it now. So, but the other really, if you look at the where that bottomed out before, where the 120 actually bottomed out, was at 39,000. This, in my worst case scenario analysis, if we stay range bound, the reason we're range bound between here is that's the high that the 120 had put in before. It's a big part of it for me. It's just, this is, you look at, this is the average volume. This is the average price. This is based on daily close, which is the most important price of any particular of the chart, in my opinion. The daily close every single day gives you the most valuable insight. This is the average price for the last basically 4 months that this asset traded at. This was the average price for that, right? And so that's kind of the peak. That was support. That's kind of why I thought we wouldn't break it, but we did. But if we stay range bound between the low of the 120, which is right at $40,000, and the high of the 120, now I've got more technical support right at 41,000. This is also why my worst case is this exact fractal. I'm gonna have to just grab it, and I'm gonna show you exactly why. Because it's this is my worst case scenario. I don't think this is gonna unfold. I think maybe too many people are expecting this. But if you look at, if I just draw this as a perfect fractal, you see exactly where that peaks out, the very low right there. It's right at the low of the 120. And then we could resume off that. So this is my worst case scenario right now, is this fractal playing out. And this is based on, you see the wicks got a lot lower. Same thing here. Daily closing price is a lot higher. But this is my worst case scenario. Basically, we stay range bound in this exact range, just like we did here, and that's accumulation all the way through early February.
A lot of things can happen in the market, right? Ultimately, you kind of have to, like, I'm always more apt to just be very clear about what I kind of think is going to happen, right? And then, I have kind of my guardrails for where, I leveraged pretty hard out of the mid-cycle low, took another leverage that I then got out of too early on that second move up. So it's very different if you're buying near the top and if you're buying near the bottom, and what you're like. I'm not in leverage right now. I'm looking to go into leverage, but yeah. Why don't I go ahead and share my screen, if that's fine?
Yep, go right ahead.
Okay. Let's see here.
Let me look at comments while you do that. No problem, Chris. I don't have the ability to put comments up, so when I have a guest speaker, I'm using Zoom. I don't have the same app that I can share comments, but thanks everybody for being here. Appreciate the comments.
I had to go and grab your picture of living by the van by the river. Just a reminder for everyone, if you want a 1.5% yield, talk to your professional financial advisor. They can help you get into long-term US treasuries. All right, so we got some bearish stuff, obviously, a lot of stuff in the news. We've got obviously a lot of damage to the chart. That's not worth ignoring. We have the Fed talking about their taper and even doubling the speed. So me personally, when I hear them becoming more and more hawkish with their words, it makes me think that they're going to be less hawkish with their actions. One of the ways, obviously, that the government brings in revenue is people selling and paying capital gains. So seeing that kind of move here into the end of the year. I mean, we all wish we were mind readers. We're not. So it is what it is. We've got the scariants. We've got pretty bad stagflation where we don't have any real economic growth, but we have prices going up. We have an extremely poor US government balance sheet and the premise of higher taxes in 2022. And then we've got a stock market that's off 5%, which these days is catastrophic. But I think more than that, people are expecting bigger pullbacks in the stock market because it's been 2 years and they haven't had like a 15% correction. And obviously with that high fear, you can get pretty big dumps, especially in cryptocurrencies like Bitcoin. I put this slide deck together 90% yesterday. I updated a few charts, but obviously we had a down 12% at one point yesterday, which that's a lot of the crypto markets. And I don't know, I wasn't as concerned about it, but I saw a lot of fear, especially I think having it overnight. This chart is one of the obviously bearish notes that I'm looking at right now. This is the Bitcoin priced in NASDAQ shares. And we actually crashed through this trendline support that I thought we had actually tested it as support right here. We came back, we crashed in. I mean, this really was a lot of liquidation going on here. But nonetheless, right, you crash through a support, you crash through a support, and you have to take note of that. Here's today, we came up, we tested it. We can look at this chart live as well, but we tested it, we pulled back. We're kind of in this range right now. So we'll see if we can get back above that support or not. But this is where I was on Twitter talking about looking for a leveraged long out of here if we can take this back as support and head higher. Because I mean, you can see it. The Bitcoin and NASDAQ is tracking, in my opinion, a lot clearer and easier to read than USD. So this is just the 2-hour chart, and we'll just go to the live chart. Somebody put out this chart on Twitter that was talking about how every time this indicator comes up, it signals a capitulation event incoming, which I thought was interesting because when I actually lined up the lines here, I don't know if you saw this chart, it looks like it's actually a lagging indicator, and this continuing up shows that we've kind of already gone through a capitulation. So we'll see. I just didn't know if people were glued to their phones or not. I saw it, so I thought I'd bring it up. I think this probably spooked the Bitcoin market. We had the adjusted circulating supply, which is counting very long-term coins that have not moved as basically dead coins. And we actually had this pop up. So I don't know if it was this entity specifically or other people seeing that these coins had moved. That kind of, right, you can see this starts to come up and, the price comes up a little bit, but then I think it takes this next jump here and you get your sell-off. So I don't know if that was the entity selling or not, but if you've been holding Bitcoin for 7 years and you move your coins and you're going to take some profit, it's not a bad time to take some off the table and rebalance even to a 1% cash allocation, right? Because you're probably very heavy in Bitcoin if you've been holding for that long. This is the market capitalization of Bitcoin, which is another chart I really like to follow. And we did fall right out of this. Is kind of what I see as institutions using the market cap chart and using the Bitcoin NASDAQ chart. In my opinion, they're just cleaner charts than USD. So we did kind of fall out of this wedge and we're now on this support line. This is as of yesterday, so I think we did pull up quite a bit off that. So it was nice to see a nice bounce off this trend line. We have our stock to flow deflection, which is kind of an on-chain indicator. And I've kind of been wondering, the stock to flow model obviously not keeping up. It is date time based. Maybe it should be adjusted for blocks, but we have a series of lower highs and lower lows on the stock to flow deflection, which is how far off from stock to flow, the middle of stock to flow are we, right? So I don't know if this eventually breaks to the upside. I would imagine that would be a big move, but until it does, we shouldn't just assume that, we're going to stay in line with stock to flow.
Yep. That's something I was looking at pretty closely lately too. Is just this. The stock to flow is in a downtrend, so it seems to be following the roughly the model, but there are market forces, and I think it probably is the dilution of interest in the crypto space among other non-Bitcoin assets is what we're seeing here. If Bitcoin was the only option and literally everything was built on it, I think the stock to flow would follow a lot more closely. I bet if you realign the stock to flow with the total crypto market cap, you probably see it's actually following pretty closely.
Yeah, and I mean, my opinion is that blockchain is generally a poor tool to solve most technical problems. And we have people who are distracted by dog coins when the purpose of Bitcoin is to actually solve a very important problem focused around the inherent problems that we have with the current fiat financial system. I think that will not be something that as larger players come into the space that they're distracted by, right? I don't see any big players buying Shiba Inu or Dogecoin anytime soon. But, I think they're going to look at what problems are most urgent with the current monetary system. And that is when, we get our big move up in Bitcoin. So when exactly that is, I'm not sure. Obviously, a lot of people have been in gold for a long time waiting for that. So we as investors want to make sure that we're checking back on those expectations and actually seeing follow through or not. Oh, sorry. Did you want to say something?
No, I just said it sounds like we're aligned there too.
Right. Yeah. I mean, like we as investors can think that there are super important problems to be solved. And if the market doesn't agree, well, then, okay, we got to readjust and figure it out from there. But I think it's way too early. I think with financial institutions, I think calendar years are big times for rebalancing those types of portfolios. And so that might be why it takes a long time to get the approval if they're anything like the organization I work for. And then it takes a long time to actually get that implementation and strategy in place. So I think the frustration a lot of market participants have had around institutions coming or not being there, I'm not as worried about it because I think the value proposition is higher than a bond that has a real negative yield with risk. This chart's the Fed taper, which, as you can see, I'm not super convinced that this is a taper happening, right? We have 3 prints here where it kind of is rolling. I would say we'll track it for now, but like they're even just talking about a taper and the markets are coming off. I would be surprised if they're able to actually follow through with an actual taper. I think that we'll see slowing, but I don't think we'll get to the point where we have a nominal taper. And they can always kind of, same thing that they did with things are transitory. They can come out and they can say, oh, well, that's not what we mean by taper, right? Like we got to shift course. We're seeing unemployment numbers come up or really labor participation rates going down. I think that's the number that they actually key on internally because the unemployment numbers, I mean, they're not super useful. It's not a super useful metric anymore the way it's measured. This was yesterday's fear and greed reading, very high. And then we have the last month, obviously, very high fear. We got all the way down to 18 today, which is another reason I'm looking to take a stab on leverage, which I don't do super often. And then we also have broader market extreme fear, which, I mean, if you look at these just last month, right, it just shows how fast sentiment can turn. You know, we had greed and even extreme greed, and we had extreme greed in the stock market, and it falls 5%, and now everybody's in extreme fear. So like, you know, it is what it is. What you have to be careful for is those moves can continue further than you expect them to. And I think that's kind of, in this rolling top, that's kind of what I've learned the most, right? Like, we were sitting at 40 fear for a long time, and my base case was that the rolling tops would actually shorten, but that didn't happen, and we actually did completely roll over and liquidate a bunch of people. So got to be careful out there. Here's that US balance sheet I was talking about. I wanted to try and like build a real-time chart for this, but they only release the data once a year. So the dude on Twitter I was talking to, I'll just leave this chart to him. But like, you know, we just hit $29 trillion in debt. We have a debt to GDP ratio of 140%, which they desperately need to get down to, I think it's around 70%, or kind of this monetary system ceases to work. So what that's really going to mean is that they're going to bring this down nominally by printing, or else the system's going to fall over. So like, if the system falls over, you probably don't want to be holding stablecoin, money in a bank account, stuff like that, right? Like US bonds, right? So it kind of comes down to like, what do you want to be holding? Because like, stable coins backed by commercial paper are probably not going to work too well for you. And then kind of zooming out and just looking at the largest liquid assets by market cap. I mean, Bitcoin is sitting at number 9. So like, people are very fearful, but like, you know, it's still one of the largest assets by market cap. It has a lot of liquidity. We're seeing those big dips, as you pointed out, get smaller and smaller. And I think that has to do with the money that is sitting on the sidelines, sloshing around, looking for a place to go. I think people are underestimating how much money is still out there and how much money is not being deployed into assets that is outpacing the rate of inflation. So with that, kind of brings us back to the zoomed out chart of price by block. I mean, you can kind of look at this, and this is, in my opinion, not an unhealthy asset and not an unhealthy market. Even looking at the cycles, we had kind of talked about, I think you remember this, there was that line at the top here, and we were talking about kind of playing the volatility here. And one of the things that I actually noticed is you can see this rolling top here right above this last cycle peak top before you really kick off and go into your mania phase. So I'm kind of looking for that, at least another leg up. I'm not really looking for things to be over. I'm not personally super fearful. But, you know, if we start to kind of come into this line and, you know, we crash right through it, we pull away from it, we get a little pop, but then maybe we pull away, right? My plan has always been, when we start to pull away from this line, if it hasn't hit my target, I'm going to be taking profit off of this. And it would kind of look something like this or something like this, but I would say I'm going to be playing off this line more aggressively with taking profit, because I think that the bull markets are lengthening and the bear markets are shrinking, you can see you have a lot less time to get out before you really kind of collapse than you did in 2013 cycle. So for me, from a block-based theory, I mean, like, or working hypothesis to make Monty happy, like this kind of price action like this doesn't really make me super concerned when I zoom out and look at it like this. In terms of ROI, I mean, you know, most of the gains are towards the end of the cycle. So like, a lot of people are looking to protect themselves from their downside, and they're not really looking at how fast these moves get away from them. So it's just something to kind of look at, consider, obviously don't put in more than you can lose, right? Like I'm right sized on my trade, which helped me, kind of think about, what are my risks to the downside? And, if we do start to see total collapses, Bitcoin's going to be worth something, and you may get bailed in if all your money is sitting in a bank account or stable coin, which is no bueno.
Yeah. Well, if I could add something. So the other question I would have for you about if you hit that black line and you're saying you're going to take profits because you think the bull market's getting longer and the bear market's getting shorter. What if some of the thesis around a random walk or super cycle? What if my thesis has been for a long time that when Bitcoin matures, just like the dot-com bubble, I kind of think 2017 and 2013 were variations of the dot-com bubble, in my opinion. And especially 2017 is more like a dot-com bubble. And post dot-com bubble, what has NASDAQ done? Well, it's like a relentless march up with random pullbacks based on kind of macro situations. So, what if the Bitcoin market simply turns into not a random walk, but a relentless drive upward with sharp pullbacks, which as a trader, I'm excited about because I can take advantage of that all day long. I don't think other people are as excited about that. But what if we don't get a blow off top? Like this is like, so if we come into your black line, there's no blow off top, and we start to roll over.
I'm not selling when we hit the black line. I'm expecting that to start that is going to kick off some sort of march is my base case.
Bear market down?
No, march upward.
Oh, okay.
Yeah, so I am looking for price to pull away from the line after some sort of move up, right? And I acknowledge it could be smaller than I'm expecting, right? I'm expecting, somewhere up here, right? But I mean, it could be, 140, 150, whatever. We pull away, we go up, we fail to make a higher high, and we start down, right? Like, okay, it's probably not going to be a random walk. And then on top of that, I am not planning on selling my entire spot stack. I only plan to sell somewhere between 25 and 30% of my spot. Just because I work in a field where I make fiat, I don't make Bitcoin. So once you sell your Bitcoin, you no longer are in possession of that Bitcoin anymore. And some of that Bitcoin is sitting in multi-sig setups where I know that Bitcoin is very secure, and like the security around that Bitcoin, I don't want to move, right? Like I have multiple wallets and I don't want to be moving the Bitcoin I don't plan to spend around because that lowers your operational security. So that's kind of how I approach it. As of right now, I'm sitting in having pretty much a free trade. So like, there's no reason for me to sell. There's no benefit for me to, take profit here, buy back here, only to sell up here. And then really you've crushed your profits by doing this short-term trading. If you have an income, I think in the US, it's like above 72,000 or something like that, you really start to pay for those short-term taxes. And if you're a really, really good trader, you can make it work. But it's easier to kind of sit on your hands on days like this, in my opinion, if you're sitting in long-term capital gain position.
Yeah, I would definitely agree in the environment we're at right now, given like I said at the beginning, feels to me like we're much closer to a floor than a ceiling. I'm not my cold wallet spot myself. I probably am not going to sell at this point, right? Unless we get I just don't see it. There's not a lot of downside. It's just a lot of sideways. So for me, it's my tradable accounts, which are all going to be taxable anyway. So I might as well liquidate that to stable coin if I think that we're rolling over at like 51,000 and we're going to come back down to 40,000, then I'll sell there and buy back and so forth and so on. But that's just my tradable accounts, which
sure. And if they solve this, right, like, okay, let's have that discussion, right? But they're not going to solve this from what I can see.
Yeah, so
So
again, I'm with you. I don't think like any long-term cold storage coins that I have, I'm not moving them at this point. There's just no point in doing so, in my opinion.
yep. So again, so this line right here is from that PiBlockTop cycle, this purple line, and it kind of was a thought experiment around how high would price have to go to trigger a new Pi cycle top. So basically, for it to peak in like mid-December, it would have had to go to like 1.2 million, which seemed very unlikely, right? But these levels over here are around the $300,000 range. I'd have to talk to Lamb again, because he was saying that the number for Pi cycle top was actually coming down due to this price action. I haven't really looked at it recently, but I mean, broad strokes here, giving us an idea of what the market would have to do to trigger a Pi cycle top. And I mean, when I drew it out and it came right through the middle of this price action, I was like, okay, I am not right, because like large consolidation areas result in big moves, either to the upside or to the downside, right? So like, it's Bitcoin. Most long-term consolidations have not ended with moves to the downside, right? You've got like this in a bear market here, but we don't have that kind of price action, right? We are still in a very strong uptrend, in my opinion. I know that people, when they look at their charts, they don't really see the market like this as much. They see, okay, well, we lost momentum here and now we're trying to gain momentum and we're rolling over again, right? Like, time to give up. And I mean, if you really do zoom out at this halving cycle, I mean, it's been as or more impressive than 2017 so far, right? Like, if you were to take this and shrink it down to here, it really isn't performing that poorly. So I think it's just that block adjustment, and it doesn't surprise me that from a market psychology standpoint that because the bull markets are getting longer, right? Like, if you had been in this market and you were here and you saw this move and then it started to go down, you would be saying, okay, it looks like it might be over. We got to look at our downside, right? Like, we didn't get the same returns as 2013. And I mean, we're seeing that kind of same conversation of, almost certainly not getting above 100K, diminishing returns, X, Y, and Z narratives. And I do see the Fed as a big risk to, hitting nominal price targets, which is why I've been kind of looking at the markets from as priced by central balance sheet, because that gives you a really good idea of how much funny money, right, fiat money, is being shoved directly into supporting financial markets. And so that kind of looks like this. And while you do see, I mean, you see like a very clear, right, diminishing returns over time in real purchasing power terms, because it's measured in central bank balance sheet. This move is bigger than, this move, right? But not by the order of magnitude that we look at nominally. And so I think that's been a really big part of what I've been looking at. And so we'll just move on to the next slide, right? And you can see Bitcoin as a percentage of central bank balance sheets is still very, very small. But you can see how well during this cycle, these Fibonacci levels were respected, kind of coming into this blow off top here in the 2017 cycle, or having two, as I like to call it. And then in the bear market, you kind of go and you retest a lot of the same levels, and then your capitulation event is down to this 1.618 level. So, and you can even see here, I drew this bar in yesterday. I was like, okay, price will probably close around here, but you're kind of just retesting the middle of, this level when measured in central bank liquidity, because while the Fed has been talking about a taper, they're not really slowing down that much, but the ECB has been accelerating their printing. So I've just kind of combined all the Western bank balance sheets and tried to visualize the Bitcoin price action in that way. And I think that kind of also helps give me a clearer picture of what's going on. And so you kind of see these same, cycles going through. Obviously, we had this liquidity event. And if you measure it in central bank printing, it took us a very long time to actually recover from that. And a lot of the price action that looks very confusing when you look at it on a USD chart actually makes, to me, a lot more sense. So you can also draw in and visualize it this way to kind of show the diminishing returns from cycle peaks. And you can kind of see we were in this bear market where, a falling wedge on just a set of log lines that I drew out, but like we broke out and we had a lot more space. And I think as time goes on, what people are seeing as like, okay, well, these are the new big moves because of how big the market is. I think what we could actually see as we get into 22, you can see these log bands really start to stretch out. And I don't know which one we're going to necessarily stop at, but I do know that as we go from log band to log band, it's going to be bigger and bigger moves. Whereas earlier in, April, May of 21, right, we were kind of playing in this very small space until we dropped down here. And now we're playing again in a smaller space. But, my expectation is we still move higher. And as we move higher, the space between those log resistances, which I would say the higher we go, the stronger the log band resistance is, it's going to be bigger moves in between. So just kind of zooming out, showing, how those log bands are drawn, giving people a better idea, and then putting in kind of this cycle of, moving towards parabolic top.
I will say this on the parabolic top thesis. I've been kind of fading the concept that we're going to get a true parabolic top now, but things are now setting up just this most recent price action. If there ever was a time that we could actually see a parabolic top, it's coming out of a really weak December where everybody who's expecting it, 4-year, whatever, is completely shaken out, and it's a boring price action coming out of this month, and then it just starts to rise, and everybody's waiting for the pullback, and it just keeps rising relentlessly through from like January through March or something, right? That if we're going to get a parabolic top, this is the recipe to get one. Is this like just shaking all the market participants out and then creating this relentless rise where people are waiting for the pullback, they don't ever get it, and they start just buying in, chasing price, and
I mean,
that's when it happens.
And so like while the 2013 cycle really respected these fib lines, what we're actually seeing this cycle is a series of fake outs. And then, if you were to draw this line across, right, this spring low, it didn't capitulate like people expected. It just faked out and went, right? And so like we are not respecting, we're actually playing games around these fib lines this cycle. So to me, when I see that, I just think, okay, well, the risk is probably to the opposite way that you're breaking on these fib lines. But it could end up where these do get respected the longer we are in this cycle. I'm not really sure, but yeah, I mean, I look at it and I don't really have a good concept of how they could stop printing and not have the US government go broke. So, maybe they make up new rules and people just accept them, but that seems unlikely. I think they're in a extended and pretend mode for as long as possible. So, I mean, if we see Bitcoin kind of gaining ground in that space, then base case is that continues to happen until something changes. Yeah, just more kind of zoomed in action to just kind of show people. I'll make this slide deck available on the CTT
Discord.
Discord, yeah, so that people can look at it. That's kind of why I put a lot of these lines in. This bar ended up pulling up a lot more than I thought it would. It is still kind of like here-ish, I think. We'd have to go look at the live chart. Here's kind of like what a diminishing return could look like, right? Like we obviously, right, not my base case, but we should acknowledge that it's a possibility that we don't get real purchasing power increases like we did from 2013 and 2017, right? It might be diminished, and as a measure of central bank balance sheets, we might only have like a 2x to go, right? And it's kind of dependent on how much they print. Which, you know, if they take their balance sheet from 8 trillion to 10 trillion, you're looking at a 30%-ish gain. And you know, you take that gain times, you know, this move up here and multiply those two gains together, and that would give you the nominal price. And then you could also kind of look at the previous two cycles as measures for the halving and draw a trend line and say, hey, if we just want to look at this nominally, maybe we only get to, you know, $81,000, $82,000 total for the cycle. That would be what a diminishing returns looks like. Not, again, not my base case, right? Like I could see us even coming up, coming down, and like, you know, launching off this point, but obviously should be on the table for people to understand as an option, even if it's not the option I am leaning toward.
Right. Before I forget, can you go back to that? We had a question earlier. So somebody did ask if the cycle peak for the recent peak, the $69,000 peak that we just put in, lines up by blocks to the 2017 peak, and I believe it was pretty close.
Yeah. So we'll go back real quick.
And I have another comment on this if I don't forget about it.
Yeah. So it's pretty close.
Yeah.
If not spot on to the 2017 peak.
So that's super interesting. we were talking about that last time we talked. Yep. This is gonna be really interesting to see what happens when we come to that date. And I think I lost sight of that, and boom, we got a sell off. But and
to be fair, I did have a bug in my code where the chart wasn't updating, which I kept running the code and it looked close enough, and I was like, okay, maybe just like it's not capturing the price volatility at the time, but I actually was reading the wrong file into memory when I was writing out the chart, and I was writing to a different file than I was reading from. So that's fixed now. Sorry about that. But what we were talking about was like 30% up calls and 30% down put to play the volatility. So there hasn't been that much volatility out of those corrections yet. I guess we could acknowledge yet.
Yeah. I go back to the other chart if you don't mind. I had a comment. I already forgot it, but when I see the chart, I think I might. No, go the one you were on before I jumped in there. Yeah, way forward here. An interesting.
This one?
No, one more. One more. That's cool, by the way, the angle that you put it at. This right here. Yeah, it's kind of cool. And then the next one after this. Oh, 80. Yeah, the 81,000. That's fine. Yeah, the 80.
Yep, that's nominally if you're looking at the log band.
If we get a top, this is my opinion, not financial advice, but if we get a local top in the high 70s or the low 80s, I think more so than diminishing returns, we're headed for, again, a different style of market moving forward, where the bear market is kind of a slow, boring grind down. I actually had checkmatey on who's analysis.
Can I just say one more thing, Brandon?
Go ahead. Yeah, go ahead.
So while I have this line drawn in here as like kind of the worst way that I could see it, we have to remember 2017 was actually a tightening cycle for the central bank, and 2013 was an expansion.
Yep.
And so I kind of have this white line just drawn in here. It's not drawn in any specific way other than to kind of be like the halfway point. I could see like a top happening here nominally more likely than a top happening here.
Yeah, that's really good insight. So if we get another rolling top, right? If we get a big breakout, like late last year style, but it happens like early, you know, starting in December through the early part of next year, whatever, a rolling top could definitely take us to those prices easily. That's where like in the 150 to 180 range is kind of where I kind of see a potential rolling top playing out. That would be a pretty significant top with a pretty severe short bear market where the bear market comes back down to 60K or 50K or something like that. That would be worth exiting on, that type of move. But on the 80,000, my kind of comment is just as a I'm not a day trader like Heath, but I'm a swing trader more or less. As a trader, if I see us make a local top at 80,000, well, I'm gonna do what I do with my trading, right? I'll trim. I'll probably be in leverage, and I'll exit leverage positions, and I'll hold that profit to buy the dip, right? That's what I almost always do. But that's gonna tell me that if we have another rolling top that low, then the downside is just back to roughly this area that we're in right now, maybe a little bit higher. We're at our last level, but yeah, I think that would tell us that the cycles are indeed changing and we're headed for more of a NASDAQ style drive and reverse type pattern.
Yeah, and I mean, we're really not that far off on our expectation, right? Like, I think we get a strong move out and we roll. I just think that it ends with the one last pop up, and you kind of think it'll roll over. And really, that's the only, like, either one could happen. I think we should be ready for either.
Well, a rolling top doesn't have to be like early 2021 either, where it's like this very gradual rolling top with these very small breakouts. It can be a 3-drive pattern with 3 significant drives, right? So the first drive can be 112, and then a back off to 70 or 80. And then the second drive can be 150, and then a big back off. And then the third drive can be 230, right? Or something like that, or whatever, some number that's bigger than I would, bigger than I'm going to bank on, but a big number like that puts us
Right.
that we're not expecting. So, and that can still be a rolling top. It's just the drives are much more severe and sharp, and the pullbacks are probably more severe and sharp, and you get that, like a pseudo 2017 look to it toward the end. But yeah, but it's really kind of a 3-drive pattern. It's probably a little more stunted, not quite as parabolic as like 2017. But 2017 was less parabolic than 2013. And so 2021, 2022, if we do put in another top and it's more of a 3-drive with a significant 3rd drive top, it could just be a smaller version of 2017, really.
Yeah, but I mean, you got to remember in 2017, the tightening didn't just happen in a straight line. They actually accelerated their tightening on a log scale. So like, this was into central bank tightening that was accelerating, right? Yeah. So like, I just think that gets people, like, when they're looking at things in USD, you need to be accounting for what the central banks were doing at the time, right? Like, the context is super important. Like, and I think that's why a lot of people are expecting this kind of, wimpy kind of last move up. And it's just not my base case, and that's why. So I think that's important that people understand why it is. It's possible. It's just not my base case. And I wouldn't judge anyone for taking profit here or taking profit here. Like, I may take profit here depending on what the price action looks like at the time, right? Because like, while I personally see this kind of move up happening, even though we had this kind of rollover and now this kind of sideways, right? Like, I still overall see this move happening in an upward direction towards where I have my price target, right? Like, we don't know. This is like days, right? So like, if we don't hit the days portion and, we roll over a little bit earlier, okay. But until we actually see that, right, we've always ended in a blow off top. I'm not going to kind of move away from that base case yet.
Fair enough. Yeah, and that's I can understand that. My biggest, and I'll just a little bit of feedback on that. My biggest criticism with people that expect, okay, we had blow off top the last 2, and therefore it's most likely we're going to blow off top. The problem with that is just the mathematical concept of area under curve, and in my opinion, the market can only support so much nominal average price. And so you can look at that if you do like a really long moving average, like the 200 week or something crazy, like but 500 day or 200 day moving average will probably work. But the when you look at how much, if you kind of look at the peaks here, and if you were to draw it like like a volume, right? You're looking at the volume of price for that period of time. You can see that price really only supports so much volume, and a very pronounced peak price is only supported for a very short period of time because it's way above the nominal market value for that asset, which again is kind of reflective in a very long-term kind of moving average price. And so my problem with the blow-off top thesis is we've already sucked so much life out of the market and buyers in the first half, right? So the first half outperformed so significantly. And when we rolled over, we burnt a lot of potential buyers and we sucked a lot of the life and the momentum out of the market. And then the whole China exit and losing a good chunk of the world, really when China banned Bitcoin mining this last time, and they went to a more severe level, that represented nearly 50% of the demand for Bitcoin. About half of the buyers dried up on that event. And so,
yeah, but I mean, they could unban it, right? And then there's your market.
Top, yes.
Right? So I mean, there's your market that people can come into.
Yes, and so you're right. I guess given without any external factors, maybe a U.S. spot ETF. Somebody commented on it. Carlos commented on it. Like a U.S. spot ETF early next year, which is a high possibility, could definitely drive a severe blow off top. And so that I think is maybe one of the few. But sans that, right? Just looking at just the market, my biggest concern with that thought process is just the amount of volume price we had for the amount of time that we had and the overperformance that we had in the first half of the cycle. I do think robs the second half of the cycle of momentum and of excitement. But again, that will change.
I mean, it could just have lengthened the amount of time to get into the momentum, right?
Maybe, yeah.
Like we don't know that that has happened yet. Yeah, and there's a lot that we don't know, right? Like this is very broad strokes with these pink lines of expectations, right? My expectations do not have to be met, but like this blow off top, this blow off top is sharper than this one, and this is a less sharp blow off top as well. So I do think that those blow off tops are not as blow off toppy, but I think that we will get the idea of, yeah, this kind of looks like a blow off top. It's probably safer to be taking profits here, especially for people who have been holding all through here.
Yeah.
Right. Like, you know, I think that there are going to be a lot of market participants that want to take profit, and there's going to be a lot of new market participants coming in that don't really know what's going on. And I mean, that just seems like that's how Bitcoin works. So in terms of on-chain, we're not seeing this super worrying coins coming on to exchanges yet. I know that you were talking about there being other ways for people to sell Bitcoin, but if I owned a lot of coins like this, I don't know if I personally would be using a lot of these DEXs and risking my Bitcoin and other coins on those exchanges just yet. So I think that this is still a pretty good indicator if we're going to have problems. But I mean, coins are coming off exchanges, which is really good to see. And even when I see the market cap of stable coins growing, right? As long as we're not having a financial crisis, because the Fed is not only going to double their taper, but then they're actually going to start tightening and raising interest rates, right? Like, I mean, this could get really ugly really fast. But so long as that's not actually happening in practice, I'm not going to lose sleep over it. If we start seeing the coins coming onto exchanges, yeah, we could see a big downturn, right? But we're not seeing that yet.
Exactly right. Yeah, and that's exactly what I'm talking. That's one of the main indicators that I'm saying. Like, it's not we don't have the same type of behavior externally to price action that we did earlier this year.
Yeah, and like from a when the cycle would peak out, I mean, these kind of rolling moves and going higher, right? It's really giving this a chance to cool off, which I really like seeing, right? Like this here to me looks a lot more like this, and looks a lot more, you know, earlier in cycles than it does, you know, the end of a cycle. So, you know, I mean, it looks fine to me from like a market, from an unrealized profit and loss standpoint. And I mean, this really is the key, right? Like Bitcoin gets pushed up as so long as people can kind of dump coins at these local tops on longer term holders, right? Because most people new in Bitcoin are buying on momentum. And so seeing this coming in and seeing this net profit and loss, it looks good to me so far. It looks like a healthy Bitcoin market. Our HODL, which I think is, very important with these market cycles. You can kind of see you get this drop in short-term holders and here, but this 6 to 12 month holding group isn't selling. And here again in 2017, we kind of see the same as the market's coming up. They're not selling and they're actually increasing. They're not selling and they're only decreasing as we come into that final top. And then you kind of see that here, this 6 to 12 month group does sell here, but here they're not selling. So I think we have a really strong set of holders right now. It doesn't, I think that it's worth tracking, but it looks like this wave 2 is still well underway. And all we're making right now is another higher low. So I don't tend to know exactly how the short-term price action is going to go, but zooming out and looking at the cycle, which I still think there is a cycle, it doesn't look like we have super worrying signs of a bear market, right? We'd be seeing a lot of this 1 to 2 year group really starting to expand. And we're not seeing that yet, which means that the people that are holding right now are holding with the expectation of selling later. So, I'm just seeing action that looks similar to earlier in cycles, not later in cycles. And then the hash rate really recovering here. I mean, when China banned Bitcoin, if most people would not have said the hash rate would be all the way back to where it was by the end of the year, right? I saw people talking about it taking 2 to 3 years to get the hash rate back. It doesn't mean the price can't come back, but the hash rate has, completely recovered, and we've got some, flattening here, but now you're even starting to see potentially this hash rate start to pick up again. So the network looks really healthy. And when you get this kind of hash rate coming off here, right, if long-term holders knew that the hash rate was going to be, China ban and they had insider information and stuff like that, it makes sense to take coins off the market or put them on the market and get some, cash reserves, because the network security is dropping and it makes it a less stable or a less secure asset from a risk reward standpoint of purchasing power later. But with this recovery, we didn't see a skate attack. We didn't see a double spend. We didn't see a takeover of the network. A lot of things that I saw being talked about in here, and, Bitcoin's moving forward. Next block. The ETH BTC chart, on the other hand, we got a pretty clear, I don't know if this has changed since I drew this out yesterday, but there's a clear break here. I think it's worth acknowledging that, we might go see a test of this upward trend line. Ultimately, Ethereum and Bitcoin are solving different problems, in my opinion. So while I personally think that fixing the money is the more pressing problem than Ethereum is solving, they had their recent upgrade that has been burning a lot of Ethereums or a lot of Ether tokens and kind of manufactured this big supply squeeze, and it's pushing the price up. It's worth noting. We've kind of talked a little bit about this on Twitter and Discord. I don't know if we'll get all the way down to this bottom target, just seeing how the Bitcoin dominance has been playing out. But, I think last time we talked, we might have been, here, somewhere. And I was talking about how I think we were actually about here. And I was talking about, not being surprised by a marginally lower low on Bitcoin dominance before we really start our parabolic rise upward. It still looks like it's in play. it's just something to note that if you're in altcoins, there is a risk here, especially with Ethereum doing so well, of Ether really going for a run against Bitcoin and a lot of traders getting on the wrong side, only to then be caught on the wrong side of that trade as Bitcoin kind of makes that reversal move. So just keep it in mind. It doesn't mean if the market is outperforming, the market is outperforming. And we'll just leave it at that. But I keep this in the back of my mind just because I see a lot of retail traders almost all in on altcoins and having on almost zero Bitcoin allocation. And to me, that would not be an allocation I would personally be comfortable holding. And then the gold chart, just as I'm starting to look for assets to ride a bear market out. I mean, I've been saying I think gold is in a bear market since, here. And I mean, this looks a lot like a bear market and it kind of needs a capitulation. So that would be a nice time. It would be nice if that kind of happened out in 22 and being able to flip some profits into gold.
That's if we do get a blow off top in Bitcoin, that's going to be it's going to suck the life out of a lot of other things, possibly, right. Probably. And I kind of hope that gold, there's a world obviously where it's macro conditions and it's a flight to safety, and gold and Bitcoin both get bid at the same time. There's also a chance that it's more of a narrative driven, and Bitcoin is talked up as the store of value, and we get this flood of funds from altcoins into Bitcoin, or whatever causes that, right? Whatever causes.
I mean, other markets too, right? Like liquid stores of value, right? Like big tech stocks, and I mean, even gold. A lot of gold is paper traded gold.
And that's
right.
Kind of why that would be nice if we got that move in gold down, right, where Bitcoin's sucking the life out of everything else, and then the top of Bitcoin gives us an opportunity to rotate. Those of us who are kind of keen watching this, that's what I've been hoping for a long time, because I want to buy some gold if it dips really hard while Bitcoin's mooning. I was hoping for that myself. So,
and I kind of see them as, I see gold as going away eventually, but not right now. I think it's a complementary technology to Bitcoin, since Bitcoin relies on the internet and gold doesn't, but gold's harder to transport and Bitcoin's easier. I mean, broad strokes here, I see them as complementary stores of value. And I think even if gold is destined to not be a store of value one day in favor of Bitcoin, that I have a hard time seeing central banks as the bag holders of gold. I think that they will do something to push the price of gold up and have their shareholders not just be holding the bag on gold. I find a hard time believing that will be the case.
Right. Yeah.
So I think we've got another run for gold.
I don't see the gold. I don't see Bitcoin as replacing gold store of value. I see it as a new store of value. That's another option. That's maybe the preferable option, but I don't see the gold disappearing. It's like people thinking gold is worthless. That's not going to happen.
Not right now, but I think eventually it'll be an industrial metal.
Maybe, yeah. It could definitely transition more to a silver style.
It's a longer, it just depends on your time horizon. Yeah, right. But I can see this line right here, this support line in gold. I could see this breaking in, whether it be, early 22 or, hopefully right around the same time that Bitcoin is peaking. That would be nice. So that's what I've got on, I just unshared my screen. That's what I've got on the PowerPoint presentation, which, I shouldn't have closed it probably. I didn't even close it. I just stopped sharing my screen. But did you have any questions on that, or are there questions in the chat? Hopefully it wasn't too boring.
I think there's 100 people concurrently on here, so it's people are hanging out here, so they're definitely interested in what you have to say. I think. Can we get some likes on this video? I don't ever ask for likes, but we got 100 people on here and 63 likes. I want to promote Michael and his work, so you won't hear me ask for likes when it's just me, yapping away. But if we get some likes on this one to promote this video for Michael and promote his work, I'd appreciate it. Comments wise. Trade Talk, Heath over here is in here talking, and they had some chatter back and forth. Heath defended the blow off top thesis a little bit, saying this month just got started. So if you look at the 2017 blow off top, it did kind of start with a bearish monthly candle print, and then it reversed pretty quickly. So there's
I agree with Heath on that, right? Like, I think people, we see in the chart plenty of times we see these big hammer candles to the upside where price closes slightly higher than where it opened, but you have this long wick, right? And I mean, I think that is always the hardest thing for people to kind of see potentially happening in real time. But like, we don't have a better month for that as of right now. We have this big move down early in the month, right? We're at the 5th of December. I mean, you look at the Bitcoin NASDAQ chart. Let me just bring that up real quick. And bring that on a monthly. Let me go ahead and share my screen. Like, share that. I mean, this is the monthly chart of Bitcoin versus the NASDAQ, right? Yeah. And yeah, we've got some wicks here, right? Like, but we also have wicks here, and we're clearly in a consolidation and testing this trend line that was prior, resistance as support, right? So if you get a big candle here, either this month or next month, I mean, this is not gonna be a small move if this tests it as support and resumes off it. That's my personal opinion. And Heath was the guy here who was saying, hey guys, like, these are some pretty big sell wicks, like, you got to be careful. So, I mean, Heath's a good trader. And I think he does a pretty good job of having a set of rules that he follows very closely, but then also kind of understanding the markets and using his experience in that sense. So that's my take on that.
Yeah, no, I definitely, when he talks, I listen. I'll tell you that right now. But that's what's your trade on. So another question here. Can you guys go over anything that changed with the break of the wave one top? Now I'll let Michael answer because I don't do the whole wave thing. Like, I am not in the last cycle had these waves, therefore we're going to have these waves camp, right? I'm going to analyze the fundamentals, on-chain, derivatives markets, and price action, and I'm going to come up with a risk model based on what I'm seeing. And I keep an eye on, like, Michael's model and other models for potential upside targets and dates for interesting dates, right? So that helps me. If we do get a parabolic top, basically I'm looking for as much help as I can get to dial in my preparedness to try to exit orderly. I'll never get the top because I'm not the type that tries to exit at the exact top. My system is predicated on exiting when we lose momentum. And so therefore we have to start losing momentum, which means we're not at the very tippy top by the time I sell. So all I'm looking for is help in dialing in my own system for exiting strong moves or parabolic tops. And I'll be exiting, somewhere hopefully close to the top, but not at the top, because there's no way I'll get the top. But as far as the waves go, I hope Michael's got a good answer for you, because I don't know and I don't care anything about supposed waves. But go ahead, Michael.
I assume by waves, we're talking about the CTM meta model, which hopefully people aren't following and haven't spent money expecting for a top in December yet. That's kind of my statement on that. I've thought we were not going to have a top in December for a while now. What I've done here, this is having one, so the 2013 cycle. This is having two, which is the 2017 cycle. And I've just kind of drawn them out because what we've seen, I think every cycle has been different. And this is something that Brendan and I have agreed on for a long time now. There are hints and notes of prior cycles in this cycle, but overall, it's been a very, very different cycle than the prior two. And so what I kind of have here is just like are we on track with what my expectations are? And if you look right here, we got a big wick in 2013. We got a big wick down in 2017 before we kind of really got into the fun parts of the cycle. And I'm seeing like a lot of fear. I'm seeing this big wick. So as far as specific waves, like wave one into wave two into liftoff, I have never really thought that we were going to see that. And I think that's a big recency bias like this looks very different than like this wave one did, right? And then wave two into liftoff, and it was wave one into wave two into liftoff. Like to me, those never look the same. I think describing the cycle like that is not a good way to do it. I think the place that people get into the most trouble is just trying to line up exact fractals and saying, oh, well, this exact thing happened on this date to this date, and so we should probably see that exactly the same thing happen again. And I think that's just not a good way to evaluate what's happening in the market. I think that having something like this where you can kind of look at longer term, what did the prior cycles do? And then are we on track? I think that makes a lot of sense. You know, is price playing nicely between these ranges or close to these ranges? And using that as a signal for, hey, if we come outside of this, right, to like a significant margin and we're outside of expectations, okay, well, what's going on? Something is wrong. But until we see that, I'm not really losing any sleep at night. So, and even coming in and hitting this wick and getting smacked down and then hitting this bottom of the 2017 cycle and bouncing back up, I mean, it's looking close enough to me that, like, to me, this looks like a good time to be looking to step in and either buy, or if you're me, take some leverage on a move up and out, because this is the part of the cycle that is going to, if we are still in a cycle market, would be the part of the cycle that's very hard to step into, and price starts to get away. So that's kind of my thought on wave one, wave two, wave three. There isn't a wave one, wave two, wave three. You're on mute, Brandon.
Yeah, thanks. So thanks. I would agree with that. While you were talking about it, I'm gonna have to rewatch that part of the video because I definitely agree with you that there's a setup now that I haven't seen for a very long time that could lend itself to a big move and or a blow off top. Like honestly, without this sell off that we just had, I could not see a blow off top happening until right now. I'm starting to say, okay, you know what? Things are setting up. You know, this sell off is giving us the kind of setup that you need to then turn around into a blow off top, right?
I mean, the big question is, do you think the Fed is telling the truth or not? Right? Like
a taper. I'm not worried about the Fed and the taper because I think they will taper some. I think what they're going to do is a combination of things. They'll talk about a lot of taper and do a little bit of it because they need to rein in inflation, and inflation is driven a lot by the real money floating around, but also a lot by sentiment and belief about, you know, what the dollar is worth and things. So I think it's going to be a lot of talk and a little action. I think they'll slow down, but not necessarily completely, you know, taper. Interest rate hikes are probably not happening for a while, but I generally agree with you that taper is probably not going to be a large or realistic drastic action. It's going to be a slow action to try to rein in inflation, but they're stuck between a rock and a hard spot. Inflation is going to just absolutely murder the Fed, so they got to slow it down enough to where inflation runs hot, but not too hot. And to your point, they definitely want to inflate away the debt. So they want, I mean, they can talk about 2% inflation. The truth is I bet the policymakers that want to go spend more money would love to see 6% inflation and drain away the relative debt, and then be able to borrow more money, right?
Well, they want to see that without asset prices getting away, right? And right now, they have a good opportunity, right? Like within the next couple of weeks to kind of front run the markets again, which is what they have to do, right? They can't just print with the markets going up and up and up and up and kind of people front running the Fed. The Fed has to kind of front run the markets, which is what they were able to do in March, right? It was here that they took their balance sheet from 4 to 8 trillion or something like that, right? Like they did it at a time when the market was behind them, and then the market caught up. So I mean, I kind of just see that as what they're doing again. They're trying to get the market to come off a bit and then front run the market. So yeah.
Yeah, and that very well might be the case. Yeah, I don't know. The reason I'm not too worried about it, though, is, again, you brought out that there was monetary tightening in the 2017 blow off top. And so I think the conditions that led up to that are what drives the beginning of that. But once you have, if you're going to go in a parabolic move, it kind of is, it's a short-lived phenomenon anyway. So it's going to be somewhat irrespective of a lot of macro things. You just need a lot of hype and a lot of people chasing price, a lot of new buyers entering the market, right? So you just need that combination of events for a short period of time. So ultimately, what the Fed does, I mean, they're not going to raise interest rates anytime soon, unless somebody disagrees with me on that. I don't see that happening. So I think, the conditions are set. There has been so much money printing. Even if they quit tapering right now, that money that they've already printed is still making its way into the economy. And it's the other thing that we like. I'm not too concerned about it because it takes time for all that to make its way into the markets and for it to. And so it's if they print a ton of money in 1 year like they did in 2020, really it was all pretty much 2020 is when they printed the majority of it in 2021 too. But it'll take until 2024 for that money to kind of fully filter its way through. So we're gonna
yeah,
have
I mean, a lot of the money they
for
didn't
years.
even make into the first round of spending, right? So like a lot of the money that they had set aside wasn't didn't actually get spent, right? It's only now getting spent with this infrastructure bill. So I mean, just kind of tagging on to your point about that, I think that's a very good insight to have.
Yeah, so I was working on a chart. I'm just gonna share this while you were let's see here if I can get my chart pulled up while you're working on whatever you're working on over there. I'm gonna share this on Twitter here in a minute. But this is my worst case scenario. I did this earlier and I was like, I'm gonna draw this up on a clean chart. So what I did here is I took this fractal from over here, right? Basically from the real precipitous breakdown area. When we lost the 120, I guess. But I more or less took this entire fractal over here and I moved it right over here. I don't see this actually happening. I think too many people now see this rolling top and they see this price action, and there's going to be a lot of people expecting this parallel. But you see, I'm going to highlight something. The duration and the severity of both the move from the base to the top and then the amount of time that it took to roll over, this is a lot shorter time. Now, I guess if you include the price action from back here all the way to here, it's maybe not too dissimilar, but it's still a fair bit shorter and a fair bit, less from base to top percentage-wise. But so this is my worst case scenario. I took that fractal, I moved it right over here. We just broke down. This is that breakout.
But I mean, you should probably compress that fractal, right?
Absolutely, I should. I'm going to say it's my worst case scenario because if by some reason it does take this long to play out, this is the worst case, right? So I want to highlight the worst case and then the best case real fast. I was thinking about this earlier, but this trend line that we just drew, this is that you guys will know it as the most important trend line in crypto. A lot of people will, but this is from the 20.
No, Brandon, that's not the most important trend line in crypto. It would be from
that one. Yeah, you're right. That was this one right
but
here.
That's fine.
Yeah, this is what you're saying. This is an important trend line. Okay, so this trend line, though, I'm taking this. So somebody said it in the comments earlier, and I saw this and went, okay, yeah, this is pretty interesting. From this peak here to this peak here and on down, what's interesting is that the daily closes of this fractal do line up pretty well with that. But because I remember I was looking for over here, I got faked out a little bit because I was looking for a Wyckoff pattern, and I was looking for about another couple of weeks, and then a spring low right here, and that never materialized, right? So this is what I'm highlighting is you're going to see me talk a lot about this as my worst case. I wanted to bring this up before we wrapped up today. This is my worst case scenario right now. But again, where price is at right now, and then the downside of this spring action, it's really, I know it's $10,000, but in the grand scheme of things, that's not that big of a move down, and we're much closer to a floor. I don't see this playing out because like you said, it should be very compressed if this is going to play out something like this. And B, this is the fundamentals again are just so different from this price action over here to this over here it's so drastically different that I just don't see us staying in this kind of suppressed area for that long. But this is again would be my worst case scenario, which would put us over here, direct. And I don't ever trade fractals, so keep that in mind too. This is just purely for kind of just like giving us a perspective of what our worst case scenarios would be, so we can protect our downsides and risk manage accordingly, right? This is really a risk management exercise. So I do this. I'm like always looking for what's the worst case scenario so I can manage my risk. But we've got about a $39,000 low, and then maybe a pop out of here. And where I got that $39,000 low from was obviously you've got this peak over here. You've got a lot of a price action through here. I believe there's monthly levels or not, but that's also the bottom of that 120-day SMA. That's where the bottom of that was. So that's the bottom of the volume of trading. So basically, the prior 120 days prior to this point, that's the whole volume. That's the average price of all this volume of trading back here. So anyway, I thought it was interesting because when I started doodling with that fractal, I just saw some things that I thought were interesting that I wanted to kind of share there about. But I don't see this playing out that way, but that's my current worst case scenario kind of in the short term. All right, and that's my thoughts on that. But I do see the scenario where we simply bounce back here and we don't get any of this. Like there's a good chance that we simply bounce and get out of here, and it's just a quick wick down, something like this, or 2017 style. But there's a good chance that what we're seeing right now is basically this price action from January, something like that, with a very fast recovery. All right, that was that. Actually, I could take a fractal from January. Are you still there, Michael?
Yeah, I'm here. I didn't have anything to add. I mean, I think that the risk isn't to, the downside at the moment. Admittedly, price went further down than I thought it was going to go, but that's the markets, and there's nothing that fundamentally or there's nothing about Bitcoin that makes me feel like it's super bearish right now. If it comes up, tests some key levels, and really starts to head down, then we start talking about risk management frameworks. But until then, it's not like I have an idea of how I'm going to manage my risk ahead of time already. It's like what, a 40%? Yeah, it was, and that was the other thing. I was looking at the high, and it was like just under 40%, and just knowing that the market's so manipulated that okay, we dropped to the very max before 40%, but didn't quite hit 40%. It's stuff like that that always makes me kind of just shake my head and think that, yeah, if you pull it, it's not 39.5, right? It doesn't quite hit 40%. So it's always those little things in the market that make me think that, when we were making marginally higher highs, I was more concerned, and when we make marginally lower lows, I'm less concerned. But I think there is some air between the top of our last wave up before the first wave. Sorry, there's some room between the first wave out of correction from summer. Yeah, from there to where the market really tanked. There's a little bit of room in here to kind of do some consolidation for a while, but I don't know. The sentiment shifts very quickly in cryptocurrency in general and Bitcoin. So it's been overall kind of, I felt like it's been a sour overall year for Bitcoin. So we'll see.
Yeah, it's felt like a sour year, and it's been a good year, which is, well, I guess
right.
from year open, what did we open the year at? We opened at 29,000, right? January 1st. Yeah, right there. January 1st, 2021, the price of Bitcoin was $29,000 at the open, right here. That's what that green line is. That's the open for the year. So if you think about it, for the year 2021, right now we're up 66% for the year, and everybody thinks it's terrible and the world's falling apart. Everybody's super bearish on Bitcoin right now, or a lot of people are, and we're up 66% for the year.
I mean, part of that is the stock markets went wild, right? I mean,
that's true. Yeah, you're right.
The stock markets had an incredible overperformance year last year.
Yep.
I don't think the NASDAQ even really, I don't think it stopped. So not every year is going to be an awesome year like this. And that makes sense too, right? People are admittedly looking at the landscape and saying, hey, we've gone nothing but up for 2 years with almost no correction. And those people are right. But the problem is that we have huge government debts that have to be paid nominally, and there's no way with closed economies to pay them. So that's the situation we find ourselves in. You can bet on a government default, or you can bet against a government default.
Indeed. Well, I think we've been going long enough. Thanks everybody for hanging out. I don't know if we have, let me look at the questions here. I've got a comment from Digital Real Estate, $317,202. So set your sell limit orders, because I guess we got a prediction on the top right there. I think Michael will like that prediction. That's probably just below some of your higher end targets.
Yeah.
317.
I had,
I'll take it.
Yeah, I mean, you know, I would rather put out the price targets I actually think are going to be hit than put out a price target that's like anywhere from 100,000 to 700,000, right? Like that's not useful.
Right.
So like, pulled the data. I drew a trend line because we have 2 points, not 3. And if it ends up being a logarithmic regression, we'll have that knowledge and we'll move forward with a log regression on nominal basis. But I mean, they've printed out so much money. I think they're going to be coming for the velocity of money in whatever ways that they can. I mean, you're starting to see a lot of these northern Western countries bringing back some of the restrictions and stuff, because if you can't stop printing and expanding the money supply because you got to pay debt and you can't raise interest rate, and inflation is kind of running rampant, the next thing that you can come after is velocity of money. So I wouldn't be shocked if that's the next kind of move with that, which, people don't like hearing that. I don't like hearing that, but that's what they kind of have these different levers, and velocity of money is a big one in terms of inflation.
Let me answer a couple of people are asking those last minute questions here. So ask your questions right now. I'm going to give a stab at a couple answers and I'll turn over to Michael for some. So one is umbrella. I think it's Frank here that's asking about umbrella. It's T-Carp on here. I've been out of a trade on umbrella for so long, man. I don't know. I haven't been watching it. Sorry. I've been out. Looking pretty rough, isn't it? It's following, really it's mirroring Link to a large degree, I think. Here, if you look at Link's chart, if I were to take like a fractal of Link real fast and just throw it over there real fast, let's take a look and see how I could have done a comparative. It'd probably been easier than a fractal, but whatever. We'll just throw this on here. Yeah. So these oracles trade together, and you can kind of see that umbrella is a little bit of an accelerant. It's kind of like Matic and Ethereum. I think umbrella, the graph is also in that category, where it's kind of it follows the sentiment around that space in the Oracle space. And so for me, I have a small investment in Chainlink and I keep holding that. This is pretty rough looking. I did take some trades on this, as you know, but yeah, at this point, I say it's dead. No, I mean, right now you're coming back into your support the base that you built over here. So it's probably just going to hang out here for a while, be my guess. But it's not great that you get this. You had this strong down move into that base that it built, and then you had a small short-lived pop and you're right back down into it. I guess that's not encouraging. I would trade this. If you've been invested in this and holding this, I would take definitely more of a trading stance on this myself. The way I would do it, honestly, is when you get above the 50, buy it. When you get below the 50, sell it. Just do it like that. On these stuff, if you're just like wanting to really hold it. So these daily, when you start closing dailies above it, a couple of daily closes above it, you can go ahead and buy and just ride it out until you get the daily closes below it. That's the easiest way to like not be like a not super technical trader, but just when you start getting closes above it, ride that momentum. And you would have gotten shaken out here a little bit. You would have had to sold here and then bought back over here somewhere. It's not ideal. So maybe apply a little bit more TA to this. That would have helped. But in general, if you just kind of buy assets when they take the 50 and then sell them when they lose the 50, it's a good way to play things without having to be totally invested in it, right? So, or add a little bit DCA when you're above and DCA out when you're below, type of thing.
Those oracles too. I mean, they tend to perform better in Bitcoin terms during bear markets. Like if you look at like the Link BTC chart during the bear market, that performed pretty well, which is a nice little solution if you're looking for a place to take less losses than Bitcoin, but not have to hold stable coins or other assets. If you want to stay in pure cryptos and look for some oracles with good fundamentals, they're more like, I don't know, I like them as bear market assets as options.
Yep. Yeah, that's definitely good. And then, so yeah, you're just holding and staking. Yeah, for this point, I mean, if you're invested in this, I don't think it's a good time to sell because you're just coming into support here, right? You've got all this. I mean, I drew it as a box. Really, your support. Now you've kind of, this is really your support area. This kind of fell below briefly and then retook it real fast. So you'll probably hang out in this area for a little bit, would be my guess. But certainly I don't know. I've not kept a good pulse on what's going on with the tech on it. I was paying more attention here when we were in those trades, but I've been out on it, so I don't really know. Let's see here. I had another question. This was a Michael question. Oh, any thoughts on a strong USD being a headwind for BTC? I'm gonna answer that and let Mike answer that. I've got a
yeah. I'll bring up my chart on that too while you're doing that.
All right, so this is my quote unquote model, if there was one for me. And I did do some modeling, and I do keep. I mean, I will check this chart from time to time. We did fall out of this. That's not good. We fell right out of my my uptrend channel here. It's not encouraging. I haven't even looked at that recently, but I'm just gonna do an compare the DXY on here, and I'm gonna show you. I gotta do some things on the DXY here. I need to move this moving average out of here. Move to new panel left. Pin to scale. New left scale. Okay. And then I'm gonna put back on log the main chart on log. Okay, this is the dollar strength. So the orange line, I'll make it, I guess, green so that it's more apparent that it's the dollar. But the greenback. So this is the dollar, and I've always contended when you look at the velocity, the direction of the dollar, it's not so much it's not the exact or level. It's the relative direction, right? So it's not the the exact price or the exact level that DXY was at. It's more the direction of the DXY. So I've noticed that it's pretty strong correlation that when the dollar is weakening, Bitcoin tends to be strong, and when the dollar is getting stronger, Bitcoin tends to be weak. You can kind of see that, like right here, dollar strong, Bitcoin weak, and then dollar weak, Bitcoin strong. Dollar weak, Bitcoin strong, dollar strong, Bitcoin kind of, flatlining to weak over here, right?
Yeah, so, it's like a headwind or a tailwind.
Exactly. So the direction, and it's not the exact dollar, whatever the DXY number print is. It's just is it risk on or risk off sentiment, right? Or tailwind, headwind, right? This is creating a headwind for Bitcoin. This is creating a tailwind for Bitcoin. That would be my answer. And there is to me, there's a pretty clear correlation. But those are my thoughts. Michael, you want to bring up your share?
Yeah, I mean, it just accelerates or decelerates the general direction of Bitcoin, right? So like, I think Bitcoin has held up all things considered. I mean, the dollar's been strengthening. If I could share my screen real quick.
Yeah, you can take over. I'll stop.
Cool. I mean, the dollar's been strengthening. It put in this double bottom here in June, which is when Bitcoin actually came out of its correction, right? So like, there were some people talking on Twitter talking about how a strong dollar is really good for Bitcoin, and that's not true. Like, a strong dollar is not good for almost anything else in the financial system. It's good for people making a dollar-based wage, but like the financial system is based on a downward trending US dollar. And so I kind of have these like curved trend lines drawn in here. I mean, this is when the financial system was like breaking, right? Like late March, early March, late April, right? So like this was bringing the financial system down, and so they printed a bunch of dollars. But you kind of see like they're running out of room to play here. But as of right now, they've got a lot more room to the downside than they have to the upside. So like, I mean, unless they want the euro to blow up, which I don't think they do, right? They're not just going to let this keep running. They're going to bring it down again. Because all these central banks kind of work together. So like, that's why that was like the other thing, seeing how strong the dollar's gotten, and then seeing how aggressive the Fed is talking. it almost seems like they're trying to set up to be able to have some more room to bring this down again. I could be wrong, but I mean, if it gets to this point, right, you kind of want to be in dollars. So it's something to track, but I don't think a strong dollar is good for Bitcoin. A weakening dollar is good for Bitcoin.
Yeah, exactly. So I would agree with that sentiment. Somebody else I'm gonna blast through some of these answers here because we probably need to wrap. But somebody asked about the Discord. So if you check my pinned tweet, go to my Twitter profile. I put it in chat just now too. There's a link to our public Discord. Michael and I are pretty active on there. And then outside of that, there was another question here. Brandon, I haven't been in the channel for a while, but know you follow projects closely. Can you brief comment on the future utility of ADA, Polkadot, and Matic from your perspective? Which one is doing well and which one's a winner long term? I've heard a lot of criticism for ADA. So I honestly, when I look at the landscape of it, Cardano is probably coming into a buying opportunity. I haven't added. I've been talking about maybe doing so for a while. I have a super small allocation of ADA since I exited this last, that last big move coming into the last hard fork, right? And I haven't bought back since then. It's just been in a terrible downtrend. I'm waiting for it to confirm support on just the log chart. It look weird. Versus Bitcoin, right? So I want it to show some strength versus Bitcoin and give me a confirmation of a bottom versus Bitcoin, and then I'll look at taking a stab at an entry on Cardano. But Cardano would be the one I think probably has the most upside from here, just because of the beatdown it's had. The FUD that you hear around the tech is broken, all this other stuff. It's 99% FUD. The 1% truth to it is it's a totally different way of doing accounting. So it's creating a lot of complexity with how do you build, like everybody's used to building all these DeFi and applications on top of an accounting model chain being Ethereum. And then its competitors, Polkadot and like Elrond and some of these others, they're all accounting models. But Cardano went down the path of going for security reasons and for stability reasons. They chose Bitcoin's UTXO model and they did an extended UTXO. So there's a lot of good valid reasons that they did that, but it takes more time for people to get used to it, and developers are all used to this accounting based world and writing smart contracts and applications on top of the chain. So it's just taking a while for people to get their heads wrapped around how to build certain applications. When they do build it, when they launch it, it'll be probably more stable as a result of it, though. So a good example of that is like Elrond, which I've been pretty heavily invested in, has been getting absolutely beat down because they launched their Myar decentralized exchange over here. That's what caused this huge ramp up in price. And then the typical, post sell-off, hype sell-off, and then we've had the whole market sell-off here. We go to the BTC charts, probably a little more fair to Elrond here. Here's the Elrond, that's ETH BTC. Where's Elrond BTC? But it's still very much an uptrend. But the Myar Dex has been down for 48 hours now, and they've had bug after bug after bug. And it's not necessarily has anything to do with the accounting model versus EU TXO model, but there's a lot of work that went into making Cardano very provably secure code and formal verification and things around that. So when a Cardano starts to get applications launched on it, namely when they get their first decentralized exchange launched on it, because that's the fear right now. So you can't even write a decentralized exchange because of people claim it's broken. That's FUD. It's not true. When the first one launches and goes live, you'll probably see a real big bounce back in Cardano because it will prove that no, the smart contracts aren't broken on Cardano. It just took longer. It just took a while for people to figure out how they want to build their applications on it. As far as Matic goes, Matic is great. I was in a trade and got stopped out on Matic. I have a hodl bag on Matic that I've had for a long time, or since the beginning of this year, basically. But yeah, I was in a trade on it. It got stopped out with all the chaos over here. I like Matic a lot. Tech speaking, Matic is the predominant layer 2 for Ethereum. And so it's a really good play. It's a leverage play on Ethereum, basically. So if you want to play it safe, just buy Ethereum. But if you want to have like a leverage play on Ethereum, Matic is a really good bet. And with that, I'm going to wrap up here. I can hear my son at the door, and I think he's wanting me to give him some attention. So I should probably get rolling.
I just want to say one more thing. I think a lot of these other protocols that haven't had a lot of monetary changes, I think that those are the ones that have really good chances at competing with Ethereum. Because like, if you think of what it takes for a long-term decentralized exchange to really have the foundation that it wants to kind of ride on, it needs something that's not going to change, that it can plan around. And I think that it's been very difficult for a lot of these. Like, I have friends that are users that are using Ethereum, and ever since the fees have gone up, that's made it a lot harder for them in their day to day, and they're a lot more open to like kind of looking at other solutions built on other chains. So that's just something, because like they're buying ETH and they're spending it to play in an NFT market space or chase whatever prevailing narrative for like these kind of scam coins, right? Because there's a difference between real projects and the ones that kind of get pump and dumped, and they kind of like to play in that space. So like, I think Cardano really hasn't had that many changes, and that's one of the reasons that I kind of like it as a competitor to Ethereum.
Yeah, I still think I'm strongly in the camp. If any smart contract platform is either going to significantly challenge or overtake Ethereum, it will be Cardano, because you have to be different. You can't just be a copy of the original, right? So Bitcoin brought with us the invention of money scarcity, right? It really brought this like, we've never had a truly scarce money and currency before, and it revolutionized a lot of things. What Ethereum did, it really discovered how to then make that fully programmable and make a fully programmable decentralized system. You hear the term world computer. I don't know if I agree with the idea, but the concept of a world computer, that was an invention that Ethereum did bring to the market. The gas fee mechanism was a new invention that was never been done before. It wasn't done on Bitcoin, it was done on Ethereum. So Ethereum does in its own right have a lot of value that's irreplaceable, because it's the discovery of that invention. What Cardano is, the reason it could succeed is it's the first implementation of that world computer style concept on the same foundation that Bitcoin was built on. So it's got the same basic ethos as Bitcoin, and a lot of the same security. This very slow moving, extremely methodical, highly secure, highly thought through, but slow moving core chain. And so if anything's ever going to challenge Ethereum, it's going to be something that's slower moving, that is more considered more stable, and it's basically infinitely scalable too with Hydra. So the other thing too is that Ethereum is not infinitely scalable. It needs layer twos, and it needs to move to this proof, sharded ledger and everything else to be able to reach the scale. But the way that Cardano was built is it had this kind of more or less native layer two built into it with Hydra. So Cardano is basically infinitely scalable, and it has the fully programmable core, but it's also the same basic ethos as Bitcoin. It's got a fixed supply cap, and it's got all the same very core rigid development principles. So if any of them are going to really challenge Ethereum, it's going to be Cardano. Forget about Binance Smart Chain. That's going to eventually fade away. And Solana's a rug pull, and a bunch of other things. Elrond's an interesting challenger, but it's still not, to me, nearly as compelling as Cardano in the very long run. So those are my thoughts.
And on the flip side, it's like hard to beat network effects, right? Like, there's probably not going to be anything that beats a network effect for the base layer of money. It may be very difficult to beat a network effect that Ethereum's built with a lot of its NFT space, if NFTs start getting applied to actual supply chain types of use cases.
Yeah, so
which I think are the more useful ones.
Yeah, there's some competitors out there too. VeChain being one of the ones that, like, it's its own chain built just for supply chain. So there might be some dilution of that through that. But somebody's asking here. Last thought I'll give is on Polkadot. Polkadot is a very good project. Gavin Wood's a brilliant guy, very valid, very well thought out, very decentralized. Avalanche is also in the same camp. So what those are, they're multi-chain. So what they are, they're enablers of smaller projects. So there is a lot of value in being able to build your own. Like, if there are applications that need their own blockchain, they need their own chain and full control of that for whatever reason. And so Cosmos, Polkadot, and Avalanche are the three leaders in that multi-chain kind of interconnected models. They don't necessarily directly compete with Ethereum or Cardano or Elrond. And in my book, they indirectly compete, but they're competing. They're like basically Square versus Shopify. right? Or Amazon versus Shopify or something. They're not directly competing, but they're indirectly competing in a lot of ways. So Polkadot is my favorite of the three currently because the development team and the decentralization that they've achieved. Avalanche is extremely compelling. They seem to have solved the problem of not being able to build a directed acyclic graph fully decentralized. The snowball / avalanche consensus mechanism seems to have solved that. So I was a little bit late to that party, so I haven't really been involved in that. That's one I will watch very closely in the bear market for real adoption. Ultimately, at this stage where we're at right now, my focus is on Bitcoin and the major trades, Ethereum, Bitcoin, and then as we reach alt season 2, I'm really trading around hype. So I want to trade things that are going to have a lot of hype. And Polkadot with parachain launches could be one to watch, and Cardano and Elrond and whatever else. In the bear market, what I'm looking for is real adoption while things are suppressed in price, and then I'll start to buy those assets. So those are my thoughts on all those projects. Michael, do you have any other wrapping thoughts?
I think watch out for alt season coming before the blow off top, and then missing, like, there may not be an alt season when we have our blow off top. Like, I think we should circle back to that. But if we get our BTCD falling first and our alt season first, I think that there could be a lot of bag holders riding all the way up along with Bitcoin, expecting an alt season. So just be careful for that in the months ahead.
That sounds like the topic for our next discussion. So maybe you and I can plan on going live in another couple of weeks.
Oh, I have one more thing. I'm just going to take this camera. So Sam, who's in the CTT Discord, she made this nice little cup holder that she usually makes guitar hangers. She liked this project a lot better, and it is really fantastic. It's been awesome. So highly recommended.
Can we buy that? Can we buy those from her?
Yes. I think it was about, I can't remember the exact price, but it was under $100, and it's like really well made, handcrafted. It was made to order, kind of like we talked about the design and stuff. Pleasure to work with, and we're actually like online friends, so that's fun. Yeah,
so let's put a link to, if she has like an Etsy or an online store that we can order from, let's put a link to that in the CTT Discord and pin it somewhere, because I'd like to buy one too.
Yeah, they're really great. I like to sit here, do charts, and drink beer. So
I got the sunset coming in my eyes. All right, everybody, thank you so much for your time today. All right, so Head Splatter's asking about Shiba Inu. I'm not even gonna comment on that. I hate it. So that's all you'll get out of me. I hate.
We already commented on that. Like, we have important problems to solve in the world, and speculating on dog coins is not one of them.
That's right. I just don't like the dog coins, man. I just don't do it. I'll trade them. I've taken trades on both Doge and Shiba. They're just pure technical trades. But otherwise, no comment. All right, guys, take care.